Hello, everyone. Well, it's almost 5 o'clock. Anyone need to stand up and do a bit of a workout? Does anyone want to do that? Because we're finishing it now. No? Okay, so I know everyone's tired. It's almost the end of the day. So let me introduce myself quickly. So I'm stepping up for today on behalf of Gillian Howard. My name is Hannes Harmalis. I'm the founder and CEO of Reinvent DAO. So we are actually building an intellectual property pool where we are tokenizing knowledge in order to create, co-create, and monetize on our platform. So for today, I would like to introduce Carney, in our Fireside chat, together with Pranav as well, in terms of the topic for today, which is corporate crypto holdings. What are the trends and predictions for the year that we're in, 2024, right? Before that, can we get a bit of a pulse? Everyone here who actually holds a crypto? Who doesn't hold a crypto, actually? Who doesn't hold a crypto? Okay, everyone's here familiar with crypto then. Okay, so, and who wants to know what crypto to invest in? All right, no one actually pick it up. All right, so let's start with the introduction first. So Carney, can I start with you? Do a bit of a quick introduction about yourself and your background.
Hi, my name is Carney. So I work for a multi-family office as a partner. We started investing in Web3 since 2017, one of the early LPs for the Animal Car brands, and the list goes on. So what happens is that I'm not only a lecturer, so not only as a partner, I'm also teaching one of the biggest university in Singapore, SMU, as an adjunct prof. So that's about me.
Thank you, Carney. What about yourself, Pranav?
So my name is Pranay, and I've been working with sexes for the past 5 years. So it's been a while since I've been part of the ecosystem, and I mainly work in growth and strategy and business development. So currently I'm here representing Exolo. Exolo is a new centralized exchange, and we're here to shake up the entire market. So as people have been talking about for quite a while, it's no longer enough for an exchange, which is usually somebody's first gateway into the crypto field, to just know that they hold all your funds, you have no custody over it, and nothing you can do about it. But at Exolo, what we do is offer a very safe, transparent, and trustworthy way where you can just trade with your assets while knowing that everything is safe.
Very interesting, because that's what at the end we need, right? We are slowly moving to the future of internet. And how can we still build trust with retail as well as now institutions are coming in? So there's different narrative, different ways. And people also talk about that 2024 is right now the bull market. So maybe I'll start with yourself, Carney. How do you see, corporate crypto holdings evolve, especially in the past years, and the trends that you see in this year, 2024?
Okay, so I can really speak for that, because when we started investing in crypto in 2016, it was super duper tough, because we are a fund management standpoint, and the last thing we want is to lose our license on investing in, high risk products. So we need the best way to get in, and the best way is not like, from Singapore, sign up with Coinbase in US and buy some coins. Then how do we account for it? How do we, even consolidate for it and stuff? So we have a lot. So in 2016-17, the only way through was through a fund. Through a fund of funds, a VC fund and stuff like that. Then after that, we tried to break through by working with, none other than Binance to really hold some crypto assets and spin off to the ecosystem. Because when we invest in funds, like for example, you invest in Animal Car, we got Polygon, there's only one way to, to exit, and that's where through a centralized exchange. So when the list goes on and we try to dump it, but when we close our books with the big four, I don't want to name who, they gave us a lot of difficulty. They say, no, you can't recognize this alternate coin because right now we can only, deal with Bitcoin, and that time wasn't Ether. Then after that, about USDT. So I had constant battles with the regulatory. But so fast forward today, it's insane. When you speak to the big four, they know their stuff already. They know how to regulate, and it makes it easier for us to even hold crypto from an institutional level, and it's easier for us to even invest in crypto funds and do duty on that. Aside from that, that's from a family office standpoint. I think it's the whole. I speak from the institutional behalf. We have we started off the journey with MicroStrategy and Tesla coming in to hold treasuries or Bitcoin. Then they became the proxy or the alpha. When Bitcoin moved, the whole crypto market in the Nasdaq moves along with them, with Coinbase, MicroStrategy. And for your info, if you see the charts of MicroStrategy, their appreciation is higher than, the Bitcoin ETFs. So putting that aside, right, it all started through that journey when people wanted to hold more crypto in their custody. But was it the right way? How do they close the books and stuff like that? There were still questions around it. Okay, that's where, Grayscale came about, they did the first ETF. There's still questions about it, how their holdings, do they buy options to it? Then after that, things evolved with BlackRock coming into space, one of the biggest asset managers. So it created a lot more credibility to come in, and more importantly, a benchmark from the US side, so that when one of the top regulators in the world set a benchmark, the other regulators follow suit, with Singapore or Hong Kong, talking about that, and even, the very aggressive Middle East talking about, let's just open it up. Let's just open it up and let all the crypto flow in. So that is where I see a lot of changes or development from that front, and I'm very pleased because end of the day, we are still, let's just be honest, we are 2.8 trillion market cap, but still a teeny bit of the whole Nasdaq.
That's
so
right.
we want that
That's
to happen.
right. But this is what I want to ask you, pertaining to that, and you can jump in as well after this. Why do you think now we've seen trends that corporations are starting to come into these crypto holdings?
Okay, I think that the question is, wherever the money can be earned, and also you understand it. So last time when you started, I think the previous panel had mentioned, when you talk about people buying crypto, they tell you scam, because it was low barriers of entry. So anyone can come out with the ICO during the 2017-18 era. Everyone was ICO, there wasn't any vesting period, zero. First day, it was launched, everyone cash out. So we mitigate all the risk to the retail. But after years of developing, maturing, and the framework goes about higher, and also more importantly, the education level of the institutions goes up, right? That's why we really realize, hey, this is something really, people trust to it. And more importantly, that's where, we got interest, we got education, and we saw alphas in it, buying a Bitcoin rather than holding a physical gold because of the appreciation. That's where, institutions get involved into this week.
Yeah, definitely. We start to see that a trend. Pranav, what are your thoughts on that? Coming from exchange?
Yeah, I think 2024 has been an entire full circle moment for crypto. How did crypto or Bitcoin even start off? It started off from the embers of the 2008 financial crash. So it's when institutions really had a big problem on their hands, and that's when the entire idea, the Bitcoin white paper, the Genesis block, that's where it all starts from. And here, all these years later, now those exact same institutions, those exact same banks, now want to buy Bitcoin. Now they want to hold cryptocurrencies. So I think it's been extremely fascinating. And it does add like a stamp of authority and approval when even institutions with the highest levels of due diligence, even they want to get into crypto. And we're hearing crazy things about 2024. Even pension funds, which are extremely crucial, they are such a huge block of the entire money supply. And pension funds are extremely crucial because they aren't just an entire lifetime's hard-earned money, but they're also about the way people will end their lives. And they're willing to bet it all on cryptocurrencies. So there are clear studies that everybody has seen. And yeah, it's a wonderful moment to be in crypto. We're still extremely early.
So this is very interesting, okay? They say, well, I'm doing an ICO soon as well, so as part of Reinvent DAO. They say ICO is actually an IPO before the product launch, yeah? And we see the traditional way or how IPO works is you start from, pre-seed, series, seed, series A and above, and then you do, voila, IPO. So in this context, how do you feel the majority of the non-2.8 trillion market cap, which are the institutions that crypto holding, can still hold that trust and wanting to put in your money in ICO, and coming from investment side and coming from exchange, how are you also trying to build not just about abiding on regulations, but also building that trust? So maybe Carney, do you want to talk about that?
Okay, I think things changed a lot, when we started 2016, and there was one of the biggest ICO project, the Huobi exchange CEO. So everyone's like, I want to raise that money to run an exchange. But then the use case was just utility without lockup and stuff like that. So fast forward, right? If you take the same project and you raise fund now, zero. You will not get any investment. So the reason why we develop, we know we got burned, we got scolded, and more than we make returns out of it. So all the VCs or what, they level up their big. Okay, a good example, last year was a bear market. So we demanded more. For example, we demanded startups to have MOU with institutional. We demanded startups to provide their roadmap, and we do revenues-based financing for them. For example, they hit the 10% of the roadmap, then we deploy funds. And we make it pretty nasty, I would say, to the startups, but end day is to de-risk ourselves. So going forward, now it's the bull market, we will see a bit of that to safeguard, and also a bit of the ICO days, so we see an in-between. So, like I said, to answer your question, every juncture of the market, right, it differs. And more importantly, it's about the exit liquidity. The big question is, how do we make money? I mean, from a venture standpoint. So right now, I can say I list a token and stuff like that, but the whole world is going to be regulated, Hong Kong Exchange will only list like 2 or 3 coins right now. So the exit liquidity has changed.
Yep.
Do I get exit liquidity over Dubai? Do I get exit liquidity over the DAX? That's a question. It diminished a lot. And Binance is restricting our listing as well. So the big question is, how do I enter and how do I exit? Things change.
Yeah. What about yourself, Pranay? What are your thoughts on this?
So from the exchange side, things are pretty different entirely. Here at Xolo, what we have is something we call a launchpad, where you have a bunch of these coins who come in, but it is extremely complicated. And we were talking about evolution, right? So initially, even understanding the tokenomics of a coin or figuring out who the founders were was extremely tricky. It was a complete red flag because most founders didn't want to be known. Nobody wanted to tell you that I am actually the holder of XYZ coin because the entire point of cryptocurrency is to be anonymous. But now, with time and everything coming in, there has to be significant due diligence, qualitative and quantitative analysis. You have to be on stage here. You have to be known as a CEO of Reinvent DAO. Otherwise, nobody's coming to your ICO.
Yeah, definitely. Well, we definitely need to talk after this. So definitely, I've seen that. 2-3 years ago, it's always about, like you said, anonymous. But things are shifting now. You see tokenization of people. All of the panels are mentioning about real-world asset tokenization, right? And how you can embed it on NFT, for instance. So NFT in probably 2-3 years ago during the NFT summer, it's a lot about digital arts, collectibles. But now you start to see real-world use case, real-world behavior that changes how consumers are perceiving this. What do you think, from a corporate holding perspective, on penetrating into this real-world asset, and what kind of tangible asset you think will be the trends for 2024? Carney.
So I think it's very interesting. So the last few years, all disclaimer, I didn't get into NFT. The reason is because, if my family office, we launch one big ticket, 1 million, 2 million into the NFT scene, what's the exit? How do we exit? We have to sell it to maybe 1,000 NFT holders, which is really hard. Okay. However, evolution changed. We have the new thing called, ECR 404, whereby the token comes with the NFT, and this is a revolution whereby we have more liquidity out there in the market, and that's where we know how to diverse, and capital can go in smoothly, and elevate the whole system. So right now with the ECR 404 technology, I think it's a huge big way how they're going to revolutionize NFT, and NFT would raise like that, because if you want to raise funds through an angle NFT, yes you can do, but it's going to be a one-dimensional whereby you keep pushing utility after utility of your NFT to engage your whole community. But with ECR 404 is different, because you have a token listed on the exchange that runs in the cash flow business, and you can also power up your utility through the NFT. So in 2 ways, cash flow is not affected, you don't get dry up, This is very interesting. So so that I think that this is going to be the next trend of NFT. So watch out for this.
It's a trend, it's coming in, right? Pranay, is there anything what about from an exchange standpoint? I know usually exchanges are looking at, tradable NFC, ERC20 type of assets. What are your perspective? Is there any predictions or plan that you guys looking at, in terms of NFT trading?
Yes, so NFT trading earlier used to be a lot like the meme coin market. It was based completely on communities and that itself. There have always been digital assets or digital artists doing great work like Beeple, etc. And they would and still held their value. But during the bear market, loads of the fluff around the NFT space has evaporated. And RWAs, I think, should be the key word for 2024, even including cryptocurrencies. I think you'll be hearing a lot more about real-world assets and how you can trade even a little bit, because how many of us have significant aspirations? We all want to own a Rolex. We all want like a condo right at Miami Beach, South Beach. So how can a person with limited means, but the will to do so, and the ability to figure out that this is something which could be valuable in time, do all of this? But yes, you can buy a part of a Rolex, you can own a part of the Mona Lisa, all through tokenization. And all of this, the advantage that it gives you, suppose I buy an entire Rolex. First of all, I'll have to pay for its storage, because otherwise it's not going to appreciate in value. So with NFTs, what you can do is you can figure out a proper storage solution, store it right there, buy your NFT, and whenever you want to sell it, you can sell it instantly. The liquidity is there, everything would be available. In the real world, what would you have to do? Physically go to that place, open up your locker, take it out, find a buyer, and then sell it. So I think real world assets are the key to NFTs, and you'll be seeing a lot more of this happening. Even in events, I'm pretty sure in the coming future, maybe in the next year or so, every single event will have a POAP, a proof of attendance protocol, or some NFT of that sort, because the use case is just so significant. Right now, after attending any single event, all we get is like an email at the end. But if you have an NFT, not only do people know that you did attend this event, they can target you again, they can know exactly what you did during that place, and can be a complete game changer.
Yeah, I love the word game changer. That's also like soul-bound token that people use on certificates, digital identity. It's not just, it's something that you see much more from a decentralized concept. In DAOs, people are trying to implement that because we are moving to a world of decentralization. But at the same time, I guess this is what I'm interested to know from the both of you. It's between centralized and decentralized, right? The future of the internet is, yes, we're moving to the decentralized future. But how can the corporate move into this direction? Like, we're not saying we're asking the corporate to move into decentralization. How can they bring in the people who are in this decentralization world to accommodate into this ecosystem? Because like you say, 2.8 trillion in crypto, but the non-market cap are much more than that, which are in the institution side. So, Carney.
Okay, so I have this envision. So we have to scale back from Web 3.0 to Web 2.5 before we scale up. Okay, the reason is because we need everything to be regulated. There's a framework for fair practices. You know, do we have that? Right now we're building towards that. You know, Hong Kong has it, Singapore has it. You know, Hong Kong has two or three regulated exchanges already, and you know, US has stuff. So when the regulatory framework is ready, and that's where the institutions are more confident and more, you know, savvy to enter. If not, there's no reason, you know, one moment it could be another FTX. They really ask, when is the next FTX? Who is the next FTX? I mean, all these are bad actors that come and haunt us back if we are not regulated. So now we need to make sure that there's an equal playing field. So once we know the equal field, the exchanges, the projects know how to work within that playing field and really, you know, outshine the whole market. I think that's really the key of how to get institutional investors in. Okay, the second point I think is also about how do you, consolidate and recognize it. You know, I think a good thing is about investing into real world asset, like, you know, I mentioned, is that, you know, I love to get a pie of it, I love to cut of it, but the question is when you consolidate and you want to report it from an institutional level, it's hard. Where do you get the benchmark price from? Like you invest in 1 out of 20 of this real estate. Is the taxation involved? You know, all these things they're not really too clear. Even from the Rolex standpoint, you buy the Rolex from Dubai, you store it there. Is there a tax over when you pull it over? All these are still very barely. So my question is, how do you consolidate everything from an accounting standpoint? So institutions are always this black and white book, right? Whereby you buy something, you need to answer, you need to pay your taxes, and you close your books. And that's where we need more advisory from the lawmakers. We need more guidance from, you know, the accounting standpoint to make sure that everything is fit and proper. And that's where once everything is set up, you know, institutions come in with hot money, like how they do with the ETFs.
That's right. So whoever here who are consultants in tax or even lawyers or auditors, time to get into, crypto and Web3 space. Because, this is the hot market. Also, AI, I would say, because this is the emerging tech. There's so many ambiguous issues on ownership, on IP. How do we recognize that? And also, how do we innovate? So another thing I wanted to say about where the institutions are moving. So right now, we have people here who are builders, who are Web3 entrepreneurs, building DeFi products. But in order to accommodate and come into, how can they tap into institution the other way around? So maybe Pranav, do you want to give your thoughts on this coming from Exchange?
First, I'd just like to pick up on what he said earlier about FTX. I think FTX was a great thing for the entire crypto ecosystem. Yes, loads of people lost money. There was a massive crash. There was a massive decline in public's perception and interest in crypto because you had 3AC, you had Citadel, and you had FTX all back to back. But that's what brought us here. If FTX hadn't happened, people wouldn't have realized that there was a need for proof of reserve. People wouldn't have realized there was a need for the Merkle tree. And Xolo might not have implemented these features. It's because bad things happen, and in a young market, we're in baby steps of crypto. There will be these challenges which keep coming forward, and as long as the industry itself keeps progressing, we keep learning from it, I think we'll be fine.
Yeah, so would you say that if the institution see that's a proof of reserve, shown on your tokenomics, or then they'd be like, all right, more confident for them to come in?
Yeah, it is slightly more confident for them to come in. And it's also the entire aspect of where they've come from. They went from trying to ban crypto entirely to understanding that there are specific use cases. And the word crypto itself, you can term it the entire blockchain system now. The blockchain tech is what most people are after and what the builders are building towards. It's not just the money anymore. It's not just people who want to buy at a particular price and become millionaires. The entire space has evolved a long, long way.
Yeah. So Carney, would you say for the builders, the entrepreneurs, if they want to tap into the institution, regulations number one, build the product on KYC. What else do you think are the tips for them to move into this trend?
Okay, I think it's, let me just rephrase the question a little. So, DeFi, there's no way you can get regulated. NFTs, there's no way you can find regulatory frameworks and stuff like that right now in the market. Soon to be regulated, but maybe not, okay? The question is, how do institutions go in? They can go in different ways. Like, I know of VC funds that only strictly do DeFi products. I know VC funds that only do NFT products, That's where you have your own backers on that. Then we have traditional family office that do fund of funds for such products, but on the other side, we can go into regulated exchange to do other stuff. So you will have your niche out there. People will see it differently. It's like, I always come up with this ideology, right? It's like, there's so much commodity in the market, a lady love diamond. Next thing, the lady love gold, silver. There's so much commodity that bronze, ruby. Just pick your poison. So there will always be an audience and an investor to it.
Yeah, definitely. I think everything will have a flavor to itself. So one last question before we end the panel. What are the trends that you predict will happen for 2024 and 2025 in crypto or Web3? Start with you, Pranav.
Yeah, so we discussed real-world assets. I think that will be key. And I think the world is moving towards a space of decentralization. The world is moving towards a space where people are now demanding more and more that we want to be part of a world where everybody has more of a right, and it's not just one particular place. Just to give you an example, even at Xolo, we do have plans within the next 8 to 10 months to become a bit of a hybrid DEX, where what people will be able to do is link their wallets, their MetaMask or whatever wallet they have, directly to the platform, and they can use the centralized exchange's liquidity in order to trade. But what happens in this entire system is you don't really have to trust the centralized exchange. You don't have to deposit your money or give anything up while enjoying the fact that, yes, there's a big institution here. They have tons of liquidity. They have their own market making, and you can execute in and out whenever you want. So I think this entire push towards DeFi is going to be a theme that we see. And the entire builder scene, I think that's going to be increasingly important because we're seeing more and more programmers and more builders being more interested to work in crypto, even if the money or the salaries offered by traditional banking or traditional institutions is clearly far more. But they just have this innovative desire to build something new, to build something different, and to build something for themselves. I think these are some of the key trends that we'll see.
That is definitely a hot topic, I would have to say. What about you, Carney? What do you believe are the trends and prediction?
Okay, this is not investment advice, so I just to give this disclaimer. So, basically, if you saw the market just 5 minutes ago, Bitcoin has went up to 70,000. I kind of believe that you'll retest all-time high before could be a potential sell on news towards halving period, which is on 19 April. So within this period, right, if Bitcoin is staying up, right, you'll see a lot of movement in the Bitcoin L2s with the ordinals and stuff like that growing the tech. However, that is the playbook for the Bitcoin. For the Ethereum playbook is very significant. So Ethereum is all about SEC, the ETS and stuff. Aside from that, the L1 playbook is very. I think this is something I'm really looking at. The key is the Genesis date. So Solana just ended their Genesis date, 2 weeks ago, and you see so much popping up with the meme coins, the whole ecosystem. Solana is all-time high. The next time we'll see Ton ecosystem, you have Polygon, all this reaching their Genesis date, and we see that they're growing their ecosystem with, if you can Google what Ton is doing, they're creating a meme coin ecosystem and they're getting people involved. So that's what I'm looking at about them, the L1s building their own ecosystem within that kind of framework and then growing along the way. Then the rest of the coin is all, speculative trading and stuff like that. That will be more the trading part of things. To back the ideas, I think this is the really big bull run, When you smell that, okay, at the top of our peak, we were 3 trillion before. So now we are not there yet, although Bitcoin is all-time high, we're only at 2.7, 2.8. Because the institutions are flowing through ETFs in the Bitcoin. We haven't yet, the alternate funds, the new projects all have to come to its place. And that's where I see the key indicator is when our whole market cap crosses 3 trillion. That is the biggest indicator for me that new funds really enter the market, not to just Bitcoin Ether, but new projects coming afloat in the market. And that's my key indicator to how I see a real bull run takes place.
Cool. Well, I guess we're coming to close. So if there are any last message for anyone out here, would you like to convey to the audience here, to the builders who are interested to come into the crypto space?
The last thing I would like to say is we have a wonderful booth outside. So please find the entire team right there for any questions you have related to product, marketing, building, etc. Please meet the entire team. Thank you.
Thank you. Carney, one last word?
I think that right now, more than ever, there's some ease or barrier. You want to build something, the VCs are all connected. Just Google them, get connected to them, put their incubators and stuff. You want to raise funds. So you want to build something, all the L1s are on board, Polkadot is there, and everyone's there. Everyone's here to work with you guys. Let me get your project out. I'll give you rebates, reward. I'll push you to the market. Then there are your KOL communities. So the whole food suite is here in 2024. Back then in 2022, you need to find builders, you need to do enablers, then you find KOL, you need to find market. But now, there's no excuse. Everyone is here already. This is 2024. So what's the excuse? Keep building, keep driving, get more adoption. I mean, that's the point. The second point is institutional coming into the market. Look, 3 years ago, 4 years ago, you can ask, how is the safest way to get the Bitcoin? But now there's no excuse at all. There is no reason why can't you buy a Bitcoin with just a snap of figure. Fiat, non-fiat USDT, no excuse. So what are we stopping at? That's the question.
Go for it. So final word from myself to everyone is that take a chance in life. Take a risk, because you never know where it will end you, right? So you must be resilient and have that tenacity to aim, be hungry in what you want. So thank you to the panelists, Carney and Pranay, for today, and have a very good evening. So I shall thank you, everyone.
Thank you.
And thank you, Hennies. Thank you very much for stepping up at the last minute. If we can get the three of you up front for a photo, don't run away, Pranay. There we go. Pranay right up front. There we go. We get a photo of the three of you. Looking good. Looking good. All right. And there we go. All right, looking good. Thank you very much to our panel. Way to step it up, Hanis. Well done. We've got one more guy getting his digs in. Fantastic. All right. All right, you superstars. Away you go. You look too good. Fantastic. Thank you, everybody. Thanks, guys. Great job. Carney, you are on fire up here. So we have our final speaker of the day is coming to us all the way from the white hot crypto center of Miami, Florida. Just before Christmas, I was doing a little bit of this type of thing at the Hong Kong Monetary Authority's ginormous Global Foreign Investors Summit. And they had the people from some of the world's biggest hedge funds there. And they were telling me backstage, Miami is where it's at. And I am hearing the same thing from our next speaker. He is Pedro Vidal. He's Community Relations Officer with Floki, with Token FI and TokenFi and Valhalla. And he's going to come up here and talk about answering the question, can we take tokenization mainstream? Here he comes. He's Pedro Vidal.